Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. So this week I want to cover off electric vehicle manufacturers, and there is a reason that I want to go through those charts with you. I think they're pretty important this week. The S&P and the NASDAQ are both breaking out to new highs. That looks very bullish. My breadth indicators are still very strong. Starting to see some changes, though, in some underlying currents. And so one of those is the electric vehicle manufacturers. So the agenda is just literally going through the electric vehicle charts. And if you have any questions about this, I also offer a newsletter on the electric vehicle theme, and we even got data this week out of Elon Musk that suggested that the size of the grid power generation would need to double for the electric vehicle movement, and I think that's probably even an understatement. Can't keep up now, and we haven't got to electric vehicles yet. So anyway, I think there's a lot to be covered off here, so we're going to jump right into it. But if you got any questions about the newsletter, go over to the website. There's a specific place for the electric vehicle newsletter. Then you can also sign up for my macro report, which is a 1-hour video every week, and a newsletter about all the different themes, usually revolving around commodities in some way. So let's just get back into the charts here. And what I want to start out with is our good friends Elon Musk. And what we see on this chart is a couple of things going on. So first of all, I want to talk about the chart trending higher. That's fine. Nothing wrong with that. But then what I want to do is zoom in here. And on this, you see how Tesla is making a higher high here. And what we're watching for is, what we don't want to see is that it all of a sudden makes a lower low here. And there's a reason for this, and that is, look at how the activity is diminished. Nobody really seems as interested in Tesla, even though they're just joining the S&P 500. So anyway, I don't want to put any doubt in anybody's mind, but I would just say make sure that this does not roll over here. And the reason we don't want to see this is we'd have a higher high in price, a lower high in momentum. And typically when you get that, that's a problem. Now, again, the reason I care a little bit more about this is because what's going on with the rest of the charts. So obviously this chart is going to the moon, and everybody thinks it's going to continue to go to the moon and all that kind of stuff. One of the great examples was Yahoo, the stock, joined the S&P 500 at a PE of 900 and something, and here we are at a PE of 1160. And of course, we all know what happened to Yahoo. It ended up being not that big of a deal later on. Now, with all the competition around Tesla, the real question is, can Tesla handle the fight on the pickup truck level, on the car level, on the electric truck, like highway tractor level? Lots of different questions here. So anyway, enjoy the ride while you're in it. I'm a little uncomfortable that the upward sloping trend line is already broken. Now this can wave along and go along at high levels over here. And perhaps that's what it'll do. Everybody's talking about how it's a software company and they're going to have a subscription model and all that kind of stuff. I get it. There's lots going on there. I just think there's a lot of competition here because we're going to go through over 30 some charts. So pretty big. So this one is a recent SPAC, special purpose acquisition vehicle or company. And what I want to talk about on these SPACs is literally, this thing on the 16th was $10. On the 25th, or 24th, it was $33. So in 6 days, it literally did a moonshot. And then it's been pulling back. So now we're already 20 some percent off the highs here. And more importantly to me is that if this was the only chart doing that, I'd say, well, maybe it's just a wobble on its way higher. But these SPACs have had a real run in all of these charts. So that's what we're going to cover off today, is just how all of them are starting to give me some clues here that are suggesting be careful of the weakness. So what we see in NEO is obviously the chart's, been a beautiful run from $2 to $57 since March. Almost every week making higher highs. That's pretty good. Now this week here, We've had a big pullback to take out the lows of last week. And you can see back in here, we had one of those big kind of reversal candles in July, and then the stock just gently worked its way higher. Here was another kind of area where it reversed it all, but it just keeps working. And lately it's actually sped up. Now, what I don't like, I don't mind the volume increasing or whatever, but what we're seeing is this big long trend in momentum. When that starts to break on something that's outperformed the S&P 500 so clearly, that's a pretty big deal. What I don't like is this part right in here. And so for me, when I start to see something that has been outperforming the S&P suddenly crunch down and stop outperforming, to me that just says be very cautious, because what's the trend change now? If this trend is changing, why won't this trend change? So anyway, keep that in mind on NIO, because it's been a wonderful run. But again, it's already off the highs here. We were $57, we're 45. So giving 12 back to our friends. Want to make sure that we try to capture as much profit in this segment as we can. Okay, a little jittery on the chart here. So here's Aryo. And they make technology or telecom equipment, but they're also in this electric car space, is my understanding. So I put it in here. But you can see that the stock has really been a mess, declining for a long time. Recently pulled up against this level and tried to break out to the upside. Has now failed, was $10 back to $6. I'd leave that go for somebody else. Now here's LI Auto. This is a big Chinese electric vehicle manufacturer, and what we see on this chart is the PPO is actually rolling over after could only be called a stellar November. Pretty much $20 from the beginning of the month to $47 towards the end, a double. But again, here's another chart rolling over in momentum right at the end. Sudden surge in relative strength here, and clearly breaking that now. Was $47 down to $35, so you've given back at least 25%. Pretty big move down. Anyway, we're seeing this on quite a few of the charts, is my point. So here's Fisker up at $23 just 2 days ago, and now $18. Really a sharp pullback. And by any stretch, I think what we want to worry about on this particular chart is just that the momentum, we ran up, we tested a prior high. So what does test mean? So we ran up, we tried to get through the prior high, and we failed, and we fell back. And then we go back and we run at it, and look at this candle from 16 to 22 all in one day. So this is what we call a breakaway gap. This is a continuation gap. Here's another continuation gap. And this one, in this case, I'm going to consider an exhaustion gap. And what you're looking for on an exhaustion gap is typically a big move up, and then to get the gap, and then you go even higher and the stock just literally explodes higher. Now, how many institutions are going to add on something that's been up 20% in a day? Not very many. And it's those people that it takes to push the stock higher. So especially after, this thing was $8, it's 21. Are you going to add to it on the next day? So typically what happens is you get way up here, and what happens is some people have the fear of missing out. Oh, it's breaking out to new all-time highs. I want to buy it. And then it pulls back. Now, this is all easy to say in hindsight once the price action has happened. What's more difficult here is this horizontal support at $18 is not holding. We closed below it for the first time. And now the main issue with closing below that is if it's no longer support, it'll become resistance. And so all the people who bought down here when this price surge happened were in the money. Everybody owned a profitable stock. And then we go up here, and now we go down. Now we're starting to lose these people that are here. So they're saying if the market bounces up, I just want to sell. Everybody down in here had profits from 16 to 24. They were up 50%. They're saying the same thing. Oh no, I've almost lost it all. I'm going to sell. So in here, you start to get a lot of selling pressure as this comes back down quickly. Again, not trying to manage anybody's portfolio, just saying that when I go through these charts as a group, they're all exhibiting this same sort of trait. Now there's an uptrend line here that's starting to crack, and you can see we had this exhaustion volume push right on this huge day up. 50 million or 60 million shares traded, that's a lot. So all of that adds up to just being a lot more concerning. Now here's Daimler, and what we see on Daimler is big uptrend off the lows, right? $21 up to $70. It's been a huge move. Whoever thought the stock would triple? It's been in a downtrend for 3 years. And then all of a sudden we get this moon launch, and it's still going higher. And so to me, what I would watch for, just because everything else is starting to fail. Now, the one thing I will say is all the new names are starting to fail, not so much the existing car manufacturer names. And so as we work through these charts, you'll see, but this could roll over kind of like Tesla did, right? And then that it might just go sideways for a bit. But what we're more worried about is if it starts to underperform the S&P 500. So if that was to happen, that would be more of a concern. You can see here we were typically just in line with the S&P 500, briefly started to outperform it at the end of 2017. Underperformed it all the way through here, so everybody was selling it off, and now it's starting to outperform. So this is looking a lot better. And again, a lot of the existing car manufacturers have done a great job of coming out with new electric vehicles. So this electric space isn't going to be as unique if all the main names are in it. Here's Nikola, and they broke their deal with GM this week. So GM is no longer going to invest in them. They're no longer going to take a position in the stock, and they're only going to be a fuel cell supplier. All of a sudden, this chart doesn't look nearly as good. It's barely holding support here, and if this starts to break, it could wander significantly lower. So this is another example of the oxygen coming out of the space. Now, over in here, we had a whole series where the CFO or the CEO, the founder of the company, had left, and we had some big stock gaps down. And then from that area, the stock's been trying to base, briefly turned up, and now all of a sudden the news about GM is breaking down. So the CEO was on TV the other day, I think it was with Kramer, and mentioned, he said, yeah, we're working with a whole bunch of vendors, but wouldn't commit to what was going on with GM. Well, my news today or yesterday said that GM was going to not go ahead with the deal. So I think that's a real problem for the stock. And as you can see, if it starts to break support here, this was a pretty hopeful company. Lots of people thought that this guy might be as innovative as Elon Musk, and that they would be able to get an electric highway tractor out to the world. And they were going to have a pickup truck called the Badger, and that was going to go out to the world. All of that seems up in the air at this point. And with the stock breaking down so hard here, I mean, this is 37 to 16. This is 50% in 4 days or whatever. Dramatic moves down. And that's the problem. Once these uptrends snap, these stocks can break relatively hard. So here's BMW, and again, same chart as Daimler, right? Taken off, or Mercedes, same company, taken off to the upside. German car manufacturer, really looking okay. And again, they were trying to break this 2-year downtrend, finally did pop, and it looks very good. So the stock is now in an uptrend of outperformance. And again, I don't think they're going to let these new car companies into the car business as quick as everybody dreamt about. So you want to be careful of that. So this BYD is a Chinese manufacturer of all different types of vehicles, but using solar and battery. They also manufacture solar panels and batteries. It broke this uptrend that goes back to the September lows. So that's concerning. Again, what I don't like on the stock is that the outperformance that we had seen, so this line here, looks like it's starting to break just a little bit. And even in here, so if we had drawn one here, this is starting to pull back a little bit. Okay, that's not the big deal. The big deal is when we get these huge surges, like parabolic moves, and clearly I think, we'll move from $4 to $28, 700% since April, or even if you just go since July when it broke out to new highs here. $7 to $27 is a nice triple, almost quadruple. So a pretty nice move. So when you get these parabolic moves, you're looking for exit signals. And the one thing I would use is either a break in the relative strength trend with the S&P 500, something that was outperforming is stopping that continuation trend. And then, so if both pulled back, the S&P and this stock pulled back, but this stock pulled back less than the index, this chart would still point higher. It would say it's still outperforming. But what's happening here, it's falling faster as it's coming down. And of course, the S&P broke out to new highs. So now the stock is no longer taking those new highs up anymore. So that's a concern. And as we start to see it break down here, we haven't broken the uptrend in momentum, but again, when you get these big long uptrends and a parabolic move, you're trying to find a place to take profit, not wait until you've been shot and left holding the stock and nobody else is left there to buy it. So that's a big change on that name there. DSG Global low-speed electric vehicles trades at 33 cents. I don't really want to talk about it, but I just put it in here to say the chart hasn't been doing anything anyway. Here's NIO, and this one's obviously been, an unbelievable name. 250 back in April and May, and $57. It's only up 25% or something, 2,500%. 25,000. I don't know. It's a big number. It's way up there. And my point being on here. Sorry, just trying to think on my feet while I talk, and it's not working. My point on this is here's another example of a parabolic move up and now breaking. And again, the stock was $57 just a couple of days ago. It's 45 now. So given back, 25% in 1 week, that's quite significant. And you can see this volume pile here. So what you get, you'll get a couple of things. You'll get volume exhaustion, which basically everybody rushes in and now there's no new buyers show up and it finishes. Or you get volume exhaustion on low volume where it keeps going up and nobody still wants to own it. So you're looking for extremes either way. And in this particular case, we had this big shoot up here in July and then the stock reversed and consolidated for 4 or 5 weeks. Even that was probably a hard one to buy back in it after it had already been up fourfold. But it continued to go on a huge run. And again, I like the two spaces they're in. One is Chinese because they were, I'll call it, having a lot less issues with COVID now. And then the second component is a lot of people are moving away from cars and towards SUVs. So they had both things going for them. The market that was healthier wasn't still suffering from COVID. And then the second component is what most people wanted. There's a lot of car companies, I think, that might end up being their strategic problem is they're in the cars and people are going to go buy something different shape. So anyway, this chart is still looking okay on price, but the fact that it's broken in relative strength tells me to worry a little. And if my PPO starts to cross down here, you see how this is a long run between these two bumps and then you get a little short run? This basically tells me exhaustion. And then the second component of that is the extra volume. All these things would lead me to be a lot more careful here as these stocks have become so extended. And here's Archimoto, big breakout, right? And then literally soared and then can't do anything with it. This was an 80-some% move or something, even 100% if you caught the tip. Really big push. But again, extreme volume, and we're seeing this on chart after chart after chart, and that's probably the more important clue that's going on here is they're all starting to roll over together. So here's Geely Holdings, and there's an uptrend in relative strength here. It broke out to new 2-year highs. That's very bullish, actually almost 3-year highs. Really nice breakout here and starting to roll over somewhat. Again, the big volume now, there's a little bit of big volume in here and it went up and then didn't do anything for months. Then it gaps up and it does it again. This is concerning to me just because it's so outsized. anyway, for me, this would be a very careful selection. I would keep my stop much tighter because all the rest of the industry group is starting to roll over after magnificent gains. So here's Lithia Motors, and this thing was $50 and it's 300. Big beautiful move in 6 or 9 months. Really have to like that. Getting up here, momentum is making lower highs while the stock is gently making higher highs. So in this case, you had a higher high, but a lower high in momentum. What we're worried about now is we go and make a higher high with even lower momentum. A lot of times you get this kind of wave down where this is just continuing. The stock can migrate sideways or it can take off. Clearly here we're going from 225 to 310. That's not really sideways, that's up significantly. It's just that the chart has been such a breakout. So with waning momentum but still positive price action, I'd like it all. The biggest clue for me here is I don't want to see this relative strength trend break. And if that starts to break, I definitely either want to find a way to cover my position with options or take it off the table. So here's full-size scooters, and I've got some stocks in here that are trading at 50 cents and some stocks that are trading at $30. This is a Chinese scooter manufacturer, and it's been a beautiful move up. Again, you get this big exhaustion spike is what I'm worried about. Normal has been 5 to 10 million, and all of a sudden it does 25. As it does that, it's rolling over, and again, we're seeing the whole group roll over. The PPO trend line is breaking here. All of this just leads me to want to exit a little quicker. There's a downsloping trend line here on momentum and higher highs in price, so you've got negative divergence. Now it's breaking down. To me, it looks finished. Fiat Chrysler, this one, another existing manufacturer, still trending higher. So it's a real dichotomy between the, I'll call it, new hyper names moving up and the regular industry moving up. And here's SPI Energy, and they announced a merger, kind of a SPAC type thing, and then special purpose investment or something, energy. Breaking sideways, hasn't really done anything. Briefly went from $10 to $16, 60% in a week, and has given it all back. So I'd be very leery on something like this. And again, draw your line up here, and if that's starting to break, that's probably your best clue out. Solo Electromechanica, just want to see where I am on my list here. I got to get all the way down to here. So I'll pick it up a little bit. Here's Solo. They make a single seat car, 3-tire kind of vehicle, and it big beautiful surge from $3 to $13. You can get by on those kind of returns in a couple of weeks, and now back down to $7, cutting it in half. So not that great, but look at the volume here. Again, another exhaustion surge. This was an exhaustion surge. For the most part, I think that's an avoid. Xpeng Auto broke the upsloping trend line here for the month of November, $20 to $74 and back to $50. Big moves here. This is a 33% off sale, but momentum is waning. And as you go higher here, we're starting to get a little weak, and we've also broken the upslope in momentum. This is a daily chart. My charts that are like Volkswagen here, usually this color background is my weekly and the other one is my daily, and I change the background so I know what I'm looking at usually. That's what I try to do. So when you look at Volkswagen, you see here, much like the Daimler and the BMW chart and the Ford chart and the Fiat Chrysler chart, just working their way higher. This one had a big pullback in the middle and then kept going, and now it's trying to break through prior highs, so that'll be an interesting spot. And we've got an uptrend in momentum. Again, don't let these things break down on you if they're going to start to fail, but I think the existing car companies are all taking a run at these electric vehicle new names out there. Toyota Motor gave back really hard, and so this was a double top. So you have your top up here, then you come back, you test it, and then you fail quickly and fall away, and not just a little, right? This is down $15 on a relatively stable stock. uptrend and momentum. Looks like it might break, but it's been downtrending in relative strength compared to the S&P 500 here for a while. So that does make me wonder. So the price moving up isn't moving up as fast as the S&P 500, so that's why this tilts down, even though there is a positive price trend there. That gap suggests that something's changed at Toyota here, and it's starting to underperform. Relative strength shown by the scooter ranking, its price action is in the worst 10%, so not very good. Here's the workhorse company, and you can see this big, beautiful uptrend on their ticker symbol, but we haven't made any real progress for a while, and we've got a head and shoulders top building. So $22, $31, and $30. Already broken the upslope, came back down, tried to make a retest here and then falls. So we don't know if that's what's going to happen, but that's a little bit of a worrisome spot. And then we're making a lower high and now another lower high. This is classic topping action that we see on a head and shoulders. So if this upsloping trend line breaks, I think that's probably another clue to exit. Lordstown Motors, this is the ticker symbol RIDE. This has negative divergence where it's on a lower high here than here, even though price got back up to similar highs. So a little bit worried about that, and we're starting to make lower highs in relative strength over here. So again, not working out very well for that one. This chart's beautiful. Ferrari, the car's beautiful, the chart's beautiful. Big uptrend here. This is one thing that I found very surprising. So since the stock IPO'd, came up, ran up, made a high, now made a lower high, now making lower highs. Will this roll over now as we get this far out on the curve, or does it finally start to break through? Great question. We'll just see. If it breaks through, that's very bullish for it. Ford. So here's Ford, the big uptrend going on, and again, PPO nice and smooth, climbing out of the hold. Notice how we don't have weird volume showing up here. We have, I'll call it a meaningful push up, but quite frankly, in the range of what we've seen this year, not like some of those other charts where they're way, way up. Anyway, the chart still looks good to me. There's nothing saying sell it. If anything, I might move this line up a little tighter than the September low here and just put it right up tight to try not and give too much back if this does roll over. Here's Lucid Motors. They make high-end luxury car in Japan, I believe, four-door sedan. It might be America. Anyway, 50-cent stock, moved up over the last couple of weeks to 80 cents. But, that scooter company's trading at $30, so this one at 50 cents seems a little odd. But you can go and search the website LUCID. Nissan. What we see on this one is the chart finally breaking out, which is very good news. Obviously, we want to see that as it pushes to the upside. So with that, a nice breakout. Don't want to see it roll over like the Toyota chart. Nikola, I showed it on that daily chart. This is breaking down again here, so not that good. And here's Hyliion. They make a big semi-truck trailer, and this chart's clearly breaking down, and there's some issues around their warrants and that kind of stuff. So if the stock starts to go through $18, it could go a lot lower. PPO momentum almost negative. That's pretty much a bad sign. And then lastly, Harley-Davidson here. There might be one more. Harley-Davidson finally broke out to new 2-year highs, and the stock has finally been on a nice run, and we don't see it curling over yet, so that's pretty bullish. Honda Motor briefly broke out here to new 52-week highs and now giving it back, much like that Toyota chart, so I'd be leery there. And Green Power, this is a company out of Santa Monica, California, ran up, pulled back, same trait, lots of volume, and now starting to fall away. General Motors, I think we all know the name. It's broken out to the upside, and it continues to behave just like an existing car manufacturer, all the other ones. So I hope you saw the difference between the two. Lastly, Hennessy Capital, Canoe Electric Cars, surging, giving it all back, high volume. So I think I made the case across the sphere of them that they're all starting to break down. So I want you to be careful out there and hopefully keep your profits. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.